My name is Christopher Smilas. I'm a CFD and Forex coach and professional trader. Come from Johannesburg, South Africa, then moved to Cyprus when I was very young. Then moved to London with my family and was educated in London, university in London. And back in 2011, in London I was working in the film industry and audio industry at Pinewood Studios, big, large productions, James Bond movies, Harry Potter. It was all sales jobs, selling audio, hardware, software for the production houses. All sales, but also very technical. I was also doing a lot of sound engineering and music production and this type of profession. 2011, unfortunately with this industry in London, the music and film industry, there's a lot of partying, too much partying. So I decided to take a break and make a small change and slow down a little bit and move to Cyprus, different lifestyle, more relaxed, more better weather, and got into Forex. This was my first job. I had sales experience, so I decided this is the main industry in Cyprus. It's either Forex or services industry, hotels, travel, this type of thing. So I got into Forex, started trading, got a few jobs, learnt the basics. The sales techniques I had already. It's a natural thing for me. But then the most important thing was to learn the Forex, the strategies, the terminologies, how to use MT4, MetaTrader 4, how to increase my knowledge and how to learn how to make a profit from Forex, and obviously how to avoid losing money, because it's possible to win, possible to lose. We all know this. Everybody knows this, and that's the truth. So yeah, that's a basic sort of background about me. Now I work together with Simon and also Christian Stern. I run my own website, forextrustclub.com, where it's mainly information, education, and assisting and helping clients to navigate their way through the Forex world without making too many mistakes, because we all make mistakes. Nobody's perfect. Nobody's going to tell you here today that we're 100% perfect, because it's not true. If someone says that, don't believe it. If you see it on the internet that you're going to get rich in 24 hours, avoid this, people. do not believe this. So that's why we're here today. We're here today to share. I'm here to share my ideas and strategies and approach to the market, and I'm also here to learn from all the other trading stars that are here. So that's that. I think I'll begin just showing some slides. What I mainly focus on when I enter and when I start looking, let's say I wake up in the morning, it's a Monday morning, I have my coffee, have my shower, have my cigarette, and I go sit down at my trading station and I look at the charts. But the number one thing, the first thing I do is I'll put on Bloomberg or MSNBC or CNN or the news. I will look for the main story of the day. If Donald Trump is losing his mind and threatening North Korea or starting a trade war, we all know about the trade war that's beginning with China over the past month or 6 weeks or so, maybe 2 months. This is probably the biggest story right now, is the potential trade war and tariffs and taxes, and this is the main story right now. So this is the type of thing I'll look out for. I'll wake up in the morning, I'll look at the main news headlines. I'll see what's the most important thing that's happening today. What are people going to be thinking about? The traders on the pits in the New York Stock Exchange, in the main stock exchanges, what they're going to be looking for. So this is why my PowerPoint is called Fundamentals and Macroeconomics. Macro meaning the bigger picture. So I look mainly at politics, geopolitics, some data points. Of course, I use technicals. You have to use technicals. It's very important, but it's not my number one thing. I think technicals, for me, they've let me down more than when I look at the news. So anyway, we'll begin now. So, fundamentals, macroeconomics, how to react to the news and data points. So as I just said, when I wake up in the morning, the first thing I do is major headlines and news feeds coming from Bloomberg and the other major news sources, even BBC, whatever. Obviously, the financial news programs and televisions, these channels are the best ones to look out for because it's all finance, you know, it's all about the markets. So I'll wake up and I'll look for the major headlines, the news feeds. Now, I'll also look, ever since Donald Trump came into power and is now the President of the United States, it's become a very strange world for traders. For me, you know, I mean, I can look at, let's say, the US dollar Swiss franc or US dollar Japanese yen from a technical point of view, and I'll say, oh yeah, it's looking very low, and RSI, relative strength index, the indicators are looking, you know, like it's a good potential buy, moving averages, convergence, divergence, all of these things, stochastics, technical indicators. And then Donald Trump will wake up. Maybe he's had too much to drink. Maybe he's had an argument with Melania or something, and he's angry and he wants to take it out on somebody, China, North Korea. He wants to make a war with somebody, and he's like a small child, and he will start throwing tweets out, threatening people, firing people from his own administration. You know, major players in the US government have kept things, you know, under the Obama administration. He was a reasonable man. He tried very hard to make a good deal with Iran, with China, and all of these other, you know, sort of dangerous countries that are a threat to the Western world, you know, the Western Europe, the United States, and other developed nations. So that's what I look for, you know. So if I'm just purely relying on technical analysis, and Donald Trump makes a tweet like this, or something else happens, a major news event, it ruins the whole trade. It doesn't matter. The technical analysis is gone. It's out the window. It has no significance to me. It doesn't work. So what I'm trying to say is I will listen to the news to get a feeling, you know, a sentiment, because it's all psychological. Traders are psychological. The market may look just like numbers, and it's all very mathematical. It's not. It's a combination of mathematical, technical, and psychology. And people have, they get scared, they get confident, and because of things like this, because of the news. So I get a gut feeling. I get a feeling or a psychology of the market, what I call the fear factor. So if I'm feeling worried, you know, if I read the news and I feel scared, I'm going to say, right, I'm going to start looking at gold. I'm going to start looking at Japanese yen, the Swiss franc. I'm going to look at the stock markets, and I say, I think I'm going to start trying to sell. Because when people are scared, they generally start selling high-risk assets. And equities, the DAX, Dow Jones, Apple stocks, they're high risk. Okay, they go up. And the S&P 500, Warren Buffett, people like these very famous investors. Warren Buffett will just tell you, put all your money in S&P 500. Keep it there. 25, 50 years, you'll be rich. It doesn't work like that. So I get a good feeling in my stomach, but then I will defer to my logic, and I will look at the technicals. I'll look at the news. I'll say, okay, I feel confident. I feel scared. If I feel confident, if I feel scared, then you should feel confident or scared. We all generally react the same way as human beings, and the market is not just numbers and computers and algorithms. It's not. It's people. They make the decisions. Political decisions, fiscal decisions, monetary policies, politics, you know, all these things. So then I'll go to my technical charts and I'll say, okay, all right, it looks good. US dollar Swiss franc is very high right now. The relative strength index is over 70. You know, the technicals support my fear or my confidence, you know. So then I'll use technical analysis as the second thing. Number one is the news, the politics, the headlines, Donald Trump's tweets. So, so ultimately I act with my stomach, with my gut. And it's not something that I was able to do, say, 5 years ago when I first started trading. When I first started trading, I didn't have this instinct. But after trading every day, Monday to Friday, 24 hours a day, Monday to Friday, I know I have a good instinct, a good feeling of the psychology of the market and how to react. So then, like I said, first thing, then technicals. I'll enter my position once I'm confident enough. I'll set my stop losses. It's always important to have a stop loss, but never put your stop loss too close to the price that you enter in. If you want the trade to move and breathe, don't put the stop loss too close. Otherwise, there's a lot of brokers out there, the market makers, Goldman Sachs, all the major investment banks. They know the price is high and it's good to sell. They know you're going to say, I'm going to sell. So what they'll do, for some reason, whichever reason, they'll just, you know, push the price up a little bit, hit everybody's stop loss, close your trade, take your money. They've made money, you're lost. You finished. So that's what I'll do. The stop loss is important. I'll set a target for the profit or the take profit order. So I'm looking for 100 pips. I'm looking for 200 pips on this one trade. And I'll essentially do a risk-reward sort of ratio. I'll have the idea in my head. I'll say, this is where I want the asset to go. I want the asset to move 200 pips, so I'm going to put my take-profit order there. And then I leave it. You know, I'll try my best to step away from that trade. You know, and what I do this a lot. And I'm not the most disciplined of people. I'm not a soldier. I'm not I was in the music industry and the film industry, and I'm quite a free person. So I tend to move my stop losses sometimes. If it's going against me, I'll say, I'll just move it a little bit higher, move it a little bit higher. This is a mistake. And I always end up losing money, a little bit of money, from moving my stop loss because of the lack of discipline. It's very, very important. Discipline is probably the most important thing in trading. You know, if you're going to start breaking your rules, your own rules, then you're probably going to lose money. So, essentially what I'm doing here is setting a stop loss. Say I'm going to lose $50. I'm happy to lose $50 or $500 on this trade, but I want to make $1,000 with my take profit order. That's called risk to reward ratio. Anyway, that's a little bit more technical than what I'm used to. So what's changed since the world we live in now, with Donald Trump tweeting and the politics and everything being so unstable, with the trade war between US and China, with North Korea, with Iran, Syria, all of these things, it creates a lot of volatility on major assets: oil, gold, commodities, currencies, stocks, indices, all of them. So what people used to look at, and what me especially, I used to look at, say 5 years ago, the most important thing was things like unemployment rates, non-farm payrolls, retail sales, CPIs, PMIs. I can go on. There's so many data points, that are happening every day, on a regular basis, that people used to only watch these fundamental, because it's still fundamental data. If you're looking at unemployment rates, this is fundamental. It's not technical. This is data that affects the markets. So people used to look at retail sales, non-farm payrolls, and they used to wait every Friday, first Friday of the month, it's non-farm payroll, and the brokers will be phoning. They'll be saying, listen, it's non-farm payroll this Friday. It's time to invest, time to make money. And this was the way it was, and some people still act this way, but for me, it's I don't want to swear, but it's not you know, it's not the most important thing these days. So what I'll tend to look at is, like I said, the news, the politics. So you can see from the chart here, this was 2007, 2008, non-farm payrolls, unemployment. It went down big time, maybe 30-40%, you know, unemployment rates. Now you can see, obviously, it's been improving, up. And now we've reached this point where it's kind of flatlining. You know, you get these data points from non-farm payrolls where people still get all excited about non-farm payrolls, you know, and what happens these days, you'll have a positive non-farm payroll, which should be good for the dollar, but the dollar goes down. Why?
Because people anticipate. I mean,
that's true.
I mean, everybody is trying to do the same thing, try to beat the market in time. So
absolutely true. Absolutely true. So what you're saying is the market makers are anticipating the anticipation of the traders and the investors, so they make the dollar move the other way because everybody's trying to get in on the same trade. And if everybody got in on the same trade and everybody won, then the banks are losing. This is a zero-sum game, okay? So if we're winning, they're losing. If they're losing, we're winning. So they have to do this, and you're absolutely right. Sorry, what was your name?
Olaf.
Sorry?
Olaf.
Olaf. Okay, Olaf, you're absolutely right. So as you can see, you know, we've reached a sort of stable point with employment. You know, we're at full employment, 4% unemployment in the United States of America. Excuse me. So non-farm payroll, unemployment, for me, I don't even wait. I don't even look at the results these days. I don't even pay attention to it, honestly. I mean, I honestly don't. I will look at it and I'll say, okay, you know, that's a good result, it's a bad result, but like Olaf just said, you know, I mean, people are anticipating these things. The banks are, the investment banks are. They know how people are going to react. So what's the point? The major thing, what they're waiting for, is wage growth to increase. This is way more important. Average hourly earnings, how much somebody at McDonald's gets paid per hour, is more important now than the amount of people who are being employed. So this is the major thing. Where is the wage growth? Where is it coming? When is it coming? And obviously the Federal Reserve are looking at raising interest rates, and they're doing it very, 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 very slowly. Very slowly. We're talking about 25 basis points, 0.25% raising interest rates. It's slow. It's a slow process. So this is the old way. For me, I don't pay much attention to all of this stuff. You know, we're waiting for inflation, you know, and the growth is slow. This has to be one of the slowest recoveries from a recession in history ever. It's the slowest recovery ever. And we're flatlining. We're just going like this, as you can see. So what I'm going to go through now, if I have enough time, is just this week. From Monday to Friday, I'm going to go through some of the major trading points I paid attention to, and I lost some money on some of them, I made some money on some of them. There's no guarantees in this business. So, as you can see, the reason I want to, again, just to say, you know, this is just to demonstrate why I pay less attention to the hard data than soft data, like news feeds, political things. Look, they're still important, but they're not as important as they were 5 years ago, for me. So I focus on the global political shifts occurring on a daily basis, and it is happening on a daily basis. We have Brexit, we had Grexit a couple of years ago, we have the massive debt in Greece, now we have the Italian elections, now we have trade wars in China, now we have Trump saying, I'm going to meet with Kim Jong-un, I'm going to go to North Korea. I'm the first president who's ever done this. I'm the best. You know what I mean? 24 hours later, I'm not going to meet with him. So this has an effect. It has big effects, much bigger effects on the markets, and creates more volatility than non-farm payrolls will do today. So, you know, this can work for me or against me. So this is our Boris Johnson, bit of a joker, Foreign Secretary of England, of the UK. Obviously, Brexit is a big deal. You know, I would say probably Germany, France, and then England in terms of the European powerhouses and economic generators and sort of leaders economically in Europe. Brexit, Britain have said we've had enough of the European Commission, the European High Courts. We don't want to take any more rules from Brussels. We don't want this free immigration, free movement of people. They've had enough. Unfortunately, it's a negative thing for me, just on a social level, because you know, all of the greatest nations were built on immigration. Okay, you might call it slavery, you might call it whatever you want, but the greatest nations in the world were built on immigration and integration. And I know that there's a certain percentage of the population in most countries in Europe that are pissed off, they're annoyed that we have a lot of foreigners coming in and taking jobs, and we're different, and we have different cultures, and we have different opinions, and this and that and the other. But that's why Brexit is happening. We had Grexit, you know, it's not solved. There's still huge amounts of debt in Greece to be paid off. How is it going to be done? By creating more debt. Essentially loaning Greece more money to pay off loans that they've already taken. So this is a messed up system. This is quantitative easing. This is you know, it's a big problem. I think it will probably be the cause of the next recession, amongst other things. Brexit, obviously, when it was announced, GBP USD went straight down. Maybe, what, 4%, something like that, 4 or 5% drop or something, 2016, maybe 1,000 pips. I don't know, I can't remember the exact numbers, but it crashed. Euro dollar had the same effect when Greece was in trouble. Unfortunately, you see in the headline, Johnson says to May, get on with it. You know, make Brexit happen. We're going on and on and on, and we're talking all this rubbish, trying to find the points. The major points are the free movement of people coming in to take jobs and get jobs in England. The other sticking point is the border with Northern Ireland and Southern Ireland, and how this is going to work, if it's going to be a hard border or a soft border. So now they're using these terms, hard Brexit, soft Brexit. I don't know what the difference is, to be honest with you. I think a Brexit is a Brexit. If a country's going to leave the EU, it's going to leave the EU, and it's going to be hard. So, and obviously the free movement of commerce, business, and all of that as well. So this is a major deal, you know. So you can see when Johnson comes out and says these types of things, it's a good idea to take a look at the British pound and the US dollar rate. You know, if Johnson says get on with it, May, nobody has confidence in the Prime Minister of England, then you're probably looking at a pound-dollar sell. I mean, people are going to lose confidence in the government. They're going to lose confidence in the currency. Again, another massive political problem right now, which people are very worried about in Europe. France, Germany, England, well, the whole of Europe. Everybody in Europe is worried about this. Italy's populist political parties are rising to power, La Liga and the Five Star. Now, this is going to be a coalition. They're very anti-EU, also anti-immigration. They will hold a referendum to leave the EU. Now, if Italy leaves the EU, what do you think is going to happen to the euro dollar? What do you think is going to happen to the euro dollar? Probably.
Correction.
It's going to go down, right? It's probably going to go down. If they have a referendum and Italy's people say, yeah, we're going to get out of the EU, we're going to go back. It's unlikely. I don't think it's going to happen. But if it does happen, It's going to be a massive problem. But again, it's for the same reasons. You know, large percentage of the population are tired of foreigners flowing into their countries and taking jobs and using up government taxpayers' money. Like in England, you know, when I was growing up, my mother didn't have a lot of money. We used to live on council estates. We used to live on government-funded housing, you know. And she did very well. I'm very proud of my mother, but she did the best she could. But what the problem is that people will see that these foreigners will come into the country and they're first in the queue. They get the house first, they get the money first from the government, and this annoys people. And I'm not saying that I'm anti this or I'm anti that. I'm quite neutral. I'm a neutral person. I'm a peaceful person. I'm not a fascist. I'm not a racist. I'm not saying that this is good or bad. I'm just saying this is the situation, and a lot of people are more aggressive than someone like me, and that's why they vote for Brexit. That's why they vote for right-wing governments. That's why they vote for these changes, because they're pissed off, they're angry, you know. And this is what happens, you know. So the headline was, you know, Italian president due to decide today. So who's going to be in charge of you know, the next movement? Again, the same screenshot, but what happens here when these situations occur is doubt, fear, uncertainty. People don't know what's going to happen. They don't know what the result is going to be. They don't know what the referendum is going to, the result of the referendum is going to be. They don't know if Italy are going to move out of Europe. Yeah. So fear generally it causes people to sell off high-risk assets like equities, the DAX, the Dow Jones, S&P 500. NASDAQ and all the rest of them. I mean, especially, I'm going to be looking very closely at the FTSE MIB, the Milano Italiano Borsa, the FTSE MIB, which is essentially the Italian stock exchange. So I'm going to be looking very closely at that over the next couple of weeks because of this rubbish. And also, on the back of that, you know, there's high-risk assets and then there's safe haven assets. So you have your Japanese yen, you got your gold, you got your Swiss franc, and also you've got your bunds, bonds, T-bills, gilts, and fixed income assets. So obviously people, when they get scared, they're thinking, sell the stocks, get out of high-risk assets, because if this happens, we're going to see a crash and it's somewhere to put, I better put my money somewhere safe. So that's generally the way I think. So that's it's a possibility. It's a possible good trade. This Le Drian came onto Bloomberg. He was explaining how if La Liga and Five Star Coalition win in Italy, they want to increase national spending. That'll be good for stocks. That's more quantitative easing. That's more free money, giving it to the stock exchanges just to do corporate buybacks and just boost the stock exchanges. To me, it just sounds like a sales pitch. And he's probably being paid by either La Liga or Five Star to come onto Bloomberg to promote this idea, you know. And this is what happens. It's called financial lobbying. So again, for me here, the main concern is the anti-EU policy, the referendum, whether to stay in the EU or not. So we could be seeing an Italexit. We had Grexit, Brexit, Italexit, maybe Spexit from Spain, maybe, you know, I mean, we could be having Gerexit next. Maybe Germany decide to leave the EU. Maybe, who knows, you know what I mean? Who knows? But what's happening politically is a shift to the right, a shift to people saying, right, we've had enough of this free immigration, people coming from countries. I mean, it was a crisis. The Syrians flooding into countries like England, countries like Germany, France, Sweden, Iceland, you know, all the European countries, and people, it makes them angry. So then this amused me, actually, that I found this very funny. Conte he's supposed to be the premier candidate for, I think it's La Liga. It could be Five Star. I'm not 100% sure on that. But Conte was supposed to be the head. He was going to be leading these parties. And what they found out, they did a bit of research on this character, and they found out that he said he went to high premiership universities. He wrote on his CV that he went to all these very high-level universities, colleges, and he was highly qualified. And it turns out that there's no proof of it. Turns out he's lying. He didn't go to any of these universities. He doesn't have the qualifications. He doesn't have the knowledge. He doesn't have... Who is he? He could be a complete imposter. He could be... Who knows? I don't know. But it made me laugh, and I said, all right, I'm going to sell the euro dollar. It tanked 0.5%. 0.5% on that news. As soon as the headline hit, euro dollar went down 0.5%. So that's a good trade. So just for a second, we're going to head back to hard data and just talk a little bit about PMI that came out this week. And again, I just want to remind you, all of this news happened between Monday and Friday this week. This is a lot of news. You know, I mean, a lot of stuff to trade in 4 or 5 days, you know. So anyway, and I want to remind you again that using PMIs, non-farm payrolls, unemployment rates, and all these types of hard data points, it is not bad or useless or old or useless. It is important still to pay attention to it. Okay, so Germany May manufacturing PMI, the expectation was 56, it was 56.8, the print, the forecast was 57.9. So it was less than expected or forecasted, but it still shows growth. You know, the way PMI works is any reading above 50 shows growth in an economy, anything below 50 shows that you're starting to go into a recession. So anyway, based on that data, I was watching the DAX, and I always watch the DAX. It's just a couple of trades I had open at the time. Obviously selling DAX, selling Dow Jones, selling DAX, and obviously another Dow Jones trade there. Now, that move happened a few minutes, or maybe even 15, 20 minutes before the PMI data came out. Okay? Now, I was asking myself, why? Why is the DAX tanking before the data has even come out? So it turns out China reduced car import duties on tariffs from 25% to 15%. This is good news for German auto companies. This is because Germans actually build their cars in Germany, so therefore they have to export them to places like China or wherever, America, China, whatever country, England, all over the world. But that's good news for the DAX. So I'm thinking, what's going on here, you know? Because the news came out before the PMI data. Okay, this headline came out before. Now, what they did, they reduced the tariffs and the import duties from by 10%, from 25 to 15%. It's good news, especially for BMW, Mercedes, Porsche, Lexus, Toyota, Japanese, American, Land Rover, British, Lincoln, and then now we're seeing, you know, basically Lincoln, American, obviously, but they're not benefiting. So we have this trade war between China. In the middle of the week, Trump, or I think it was Mike Pompeo, the business secretary for the Trump administration, said to China, right, let's put the trade war on hold. We're going to press pause. We're not going to go to a trade war, full-on trade war. We're going to pause it. And then China came back also with good news, and they said, okay, yeah, we'll meet you in the middle. We'll do something good for you, and we'll cut the import duties by 10%. But that doesn't help America at all, because America don't build their cars in America. They build them in China. So what's the point, right? What are you going to do? You're going to put an import. You're going to give me a 10% reduction on the import duties when I don't export cars to you. So it got me thinking. I'm thinking, what the heck is going on? And then the PMI data comes out. I'm seeing the DAX tanking. Good news, and the PMI is bad news. And as I just said, you know, America are not benefiting as much as Germany and France and other car manufacturing companies from the new tariff cut from the Chinese imports. What will Trump do next, I ask myself. Less than a few hours later, we hear that Trump will conduct a federal probe into car manufacturers, auto manufacturers, and why they have such a monopoly, why they're so successful. And he calls this, this executive decision or investigation or probe, because he is a child. He thinks everything is unfair. He thinks America are being treated unfairly. The greatest, most powerful nation in the world are being treated unfairly. And it's very annoying for me. And I'm sure many other people are not big Trump fans. I don't know, put your hand up if you are a Trump fan. Anybody in here a Trump fan? Oh, I didn't think so. Right, so the DAX had moved down 1% on what seemed to be positive news for the auto industry before the PMI data was even released. Negative PMI data came out, and it just pushed the DAX down further. And this is why, because of the new probe that Trump is now going to start putting pressure on BMW or BMW and Volkswagen and all of the German and French, Renault, everybody, and it's craziness. It's absolute madness. And this is all done through Twitter, by the way. It's the first president in the world that's using Twitter to conduct executive decisions and policies, and the guy's sitting up watching Fox News until 3 o'clock in the morning and just tweeting. President of the United States. It's unbelievable. Funny, amusing, but still unbelievable. So who's going to be affected by the new probe? Trump claims this probe into European and German auto manufacturers' exports, imports is a matter of national security. Come on, guys. Because you're making more cars than America, you're making more money than America from cars. What? This is a national security thing? This is going to cause Third World War? No, I don't think so. It's jealousy. It's like I said. It's a man, sociopathic psychology. He's a madman. It's entertaining, but it's very annoying. So what happens after that? Merkel, Chancellor Merkel, she decides to get on her private jet and go off to China and start talking to the Chinese and start making some good deals, because obviously America have a lot of power. If they start making some trouble for car imports and exports from Germany and companies like BMW and Mercedes, etc., then obviously it could cause those companies some problems. And then, I remind you once again, this is all between Monday and Friday, just this week. All this stuff has happened in 5 days. 5 days. So Mike Pompeo takes hard line on Iran. That was the headline. What this does, because of what the Obama administration did, they made a deal with Iran, and they were going to start, exporting their oil and buying their oil. And obviously companies like Total and European oil companies decided, right, this is good for us. There's a lot of oil in Iran. With all of the sanctions that were on Iran before Obama did the deal with them, those sanctions didn't allow Iran to export oil. So the way they did it, they would take the oil and they would sell it on the black market to other countries on the lowdown. They wouldn't say anything, and then those countries would sell that oil on the global market, and obviously Iran would still make money, and everybody's sort of happy. But the reason why they're doing this, in my opinion, and obviously, again, this is all just my opinion. Everything I'm saying is my opinion. None of this is, you don't have to take it as fact. It's just my opinion. So, Total, for instance, I'm sure you all know Total, the petrol stations, Total. Okay, so they've already moved oil rigs to Iran. They've already started doing, they thought they were going to be able to do business with Iran. Now they're not. They've probably spent billions of dollars setting up oil rigs, trying to get Iranian oil, and now because of this rubbish, they can't do it. And I'm sure many other oil companies were just on the verge, and European companies were just on the verge of buying oil to produce, plastic products and yada yada yada. other jet fuel, airlines, all sorts of companies were relying on this Iran deal. So Mike Pompeo, Donald Trump decide, no, okay, that's it. You know, we're pulling out of the Iran deal. And I think it's just more power for Saudi Arabia and USA. It's a power play or a move because Trump thinks it's unfair. So the next thing, just after the US market opened on Thursday, so that was 4:30, 4:30 in Cyprus, where I live. Trump announces he will not be meeting with the leader of North Korea after bragging about it and boasting and showing off and saying, I'm the first president in the world who's ever been able to, have a meeting with Kim Jong-un, the first guy who's ever, to be allowed into North Korea to meet with Kim Jong-un or his previous, his father before him. So after that, the Iran news, the new embassy in Jerusalem, all of those dead people, casualties, gunfights, just horror, basically. And obviously trade wars with China. I could go on and on and on and on about all the rubbish that Donald Trump has caused over the past few months. But that would take me about a week. So every day he's tweeting something. And I'm waiting for those tweets, I'm waiting for, that's why I have the news on just constantly. I'm waiting for these opportunities because look at this is the VX, the VIX, the volatility index. That generally what that means, if that's going up, right, that means that people are getting scared, volatility is increasing and equities are decreasing. So people are starting to get scared, they're selling stocks, they're selling the DAX, they're selling the Dow Jones, they're selling the S&P 500. So these things affect the markets in a big way, much more so than non-farm payrolls, unemployment rates, PMIs, retail sales. But once again, they are still important. I did quite well from that trade, by the way. I did all right because I was selling the DAX. But when you're trading stock markets, there's always an industry sector. So you'll have. So let's say in the S&P 500, you've got your financial sector, the banks, you've got your technology sector, or Silicon Valley, Facebook, FANGs, this group of. So they're built up into sectors. Unfortunately, what happens in the world is if the threat of war increases, so when you're trading industry sectors, some industry sectors will lose and some will gain most of the time. Unless there's a massive meltdown, which none of us want. But in this case, because it's a political thing, North Korea, if you don't want to piss North Korea off, if you don't want to make them angry, you don't want to make China angry, you don't want to make Russia angry, and Trump is doing all of those things. And he's not the best negotiator, he's not a diplomat. It's lucky for us. I'm English or British. Okay, we don't have the best government right now. I don't have much faith, but at least being in Germany, I'm very happy to be here. Angela Merkel is a good diplomat, and she does have a very good relationship with China. That's why she went over there after the investigation into the car manufacturers. So, because of all this, Trump says meeting with Kim Jong-un won't happen now, after boasting about it for the past 3 weeks. So really, for me, that is a massive possibility that that war could happen. Now, Lockheed Martin, they make planes, missiles, General Dynamics, similar, Raytheon, similar companies. Their stocks are going up, while the rest of the index, the Dow Jones or S&P 500, is going down. So that's what I mean when when trading stock markets, you've got to watch. You're watching the index as a whole. So let's say there's 5 sectors in one index, 4 sectors are losing, so the index is going down on an average. But that one sector, the military sector and defense sector, industrials, they're going to be gaining because the threat of war is going up. So they're saying, right, okay, let's build missiles, let's build planes, let's do this, let's do that. So even with that, you can take a small bottom-up perspective, bottom-up view, and still make some money from this type of information. On to the next slide. So on the left you've got gold, on the right you've got the DAX. No, sorry, the Dow Jones. Also based on the reaction to the cancellation of the Trump meeting with Kim Jong-un. Safe haven asset, high risk asset. People are selling risk assets, going into safe havens on a instant, as soon as the news comes out. So that's what I'm looking for when I'm trading. So I'd like to move away from Donald, or the Donald, as he likes to call himself, and just go on to some other news events that I traded. So again, very quickly, Mark Zuckerberg back in court, all to do with data protection and how Cambridge Analytica got hold of, I forget the number, 280 million. The number keeps going up and up and up, of all of our personal data on Facebook, all of our personal information being sold to a company called Cambridge Analytica that essentially are a marketing company in a sense. They're a marketing company. They sell data, and that's they can have an influence on political elections, referendums, etc., etc. So now we've got this new GDPR law that came in, well, today or yesterday actually. But this, I didn't trade Facebook, but if Facebook is going down, or Google, Google's next, by the way. Google are going to be in court next. Alphabet is the umbrella company of Google and the rest of their products and Facebook, their websites and products. So Facebook are in trouble again. He has to testify in front of EU lawmakers. He's in trouble. They grilled him. They gave him. I didn't watch it because it's like a 7-hour thing. So I just didn't have the time for it. I knew, they were going to give him some hard questions, much harder than the U.S. Senate did. So what happened was, I'll just read from the slide. Zuckerberg questioned by EU lawmakers. The EU scrutiny now, and they're being criticised because Zuckerberg was allowed to avoid a lot of the questions. He would say, "I'll get back to you." They'd ask him a direct question: "Why did you allow this to happen? How did this happen?" "Oh, I'll get my team to send you a letter. I'll give you the answer." And the EU Commission, the lawmakers, they really weren't happy with this. So this guy was being interviewed, Antonio Tajani, and he was saying, "Look, I'm not the guy in charge of all of this." And anyway, they face a lot of scrutiny. Zuckerberg did as well. So they're both being criticised. And as I mentioned, now I'm sure, how many of you have been receiving emails and text messages from subscriptions that you've made on the internet saying opt in, opt out, do you want to continue getting information from this company, yada yada yada. That's what GDPR is. Now GDPR, I don't know what the acronym stands for, but you can Google it. But it's going to affect all the FANG sector, or the FANG group, which is the technology group: Facebook, Alphabet, Netflix, Google. I think I've got that right. I might have that wrong, but anyway, it's going to affect the NASDAQ. I'm looking to sell the NASDAQ based on this GDPR new law. Turkish bank, Turkish lira, big problems, huge problems. My friend Simon at the back there, he's been trading it. He's the expert on this one. But it's in free fall. The Turkish lira, the Turkish government, the Turkish central bank, Erdogan decided to step in last week, and he said, "I'm going to take control of the interest rates." Didn't help at all. In fact, it worsened the situation. So again, another great news point to trade. I don't trade it myself, but it is. You see the headline there on the left: Asian stocks fall on risk aversion. So because the Turkish lira is tanking, it's leaking into Asia. This disease, or this problem, this economic issue. Anyway, it's another good trade based on news. So to summarize, because I'm running out of time, use the news. Okay, that's basically what I'm trying to say to all of you, is use the news. If you know what you're doing, it takes a long time to be able to react quick enough and to be able to see through the truth and the lies, because there's a lot of lying going on, and a lot of people getting paid to go on TV and say this is happening, you know, because they have vested interest in certain companies and they're getting paid to do it. Essentially, they're lobbying, you know, like a political lobbyist does, or a financial lobbyist. So watch out. But use the news, act fast, get in, get out, use a stop loss or trailing stop loss orders. That's for your own safety, just to, you know, because it's volatility. What I'm talking about here is volatility. These news events create massive movements on the market. So if you're not using a stop loss, you could either make a lot of money or lose a lot of money. So use a stop loss, please. We all look for the investment of a lifetime that will continuously make us money for the rest of our lives. Good luck with that, because the world's always changing. Warren Buffett, as I said earlier, he just says, put all your money in S&P 500, you'll be okay. It's not true. Trust your gut after doing the research of the news feeds and the headlines. Use technical support to support your trades, or technical analysis to support your trades. I think that's about it from me. Thank you very much. Good luck with your trading. If you're going to trade, good luck. All the best to you. Thank you for listening. This is high risk, and the game is changing. Politics govern it. But then again, you know, you can read for yourself. You know, thank you very much, and thanks for listening. And you know, good luck.